Have you ever thought about investing in real estate but you have a bad credit score? Also, no money. There is no such thing as a no money down deal on owning an investment property, and there's no such thing as a perfect score. Investing in real estate means purchasing property as your sole source of revenue. The ability to make good investments starts with knowing how to detect, evaluate, and invest in high potential investments. If you have bad credit scores, you can take advantage of the market without any money by investing in real estate. If you are looking for ways to wholeheartedly invest in real estate, you should learn how to recognize and take advantage of other people's money. Luckily for you, Real Talker, we are going to share with you the 10 ways you can invest in real estate right now with no money and bad credit. So sit back and watch this video till the end. And from there, you will get a lot of insights. While you're here, subscribe to the Real Estate Real Talk YouTube channel. Number 1. Acquire a hard money loan. Real estate investors with less than stellar credit can get a high rate of return on their loan from a hard money lender. It is easy and plentiful to find. Hard money lenders provide loans regardless of your credit history. A loan from a hard money lender is a great option for real estate investors in need of capital. Hard money lenders offer short-term loans that are secured by real estate. These lenders are only interested in lending to people who want to take on high-risk and high-reward investments. Because hard money loans provide funds quickly and the entire investment process is completed within days, you have the ability to invest in real estate with no money or credit. For real estate investors, this is an excellent source. Hard money lenders don't just look for clear credit scores. They also weigh other factors, such as how much effort you're putting into the property, your past income, and monthly expenses. If you have bad credit, don't fret, because there are people who understand that and will help you get funding. Even if your score is a not so good one, your application is still welcome by lenders. Hard money lenders only care about one thing: if the deal works out well and is a good investment. Their most important concern is whether your home's value is great. They assess whether a deal is a good one. If it matches the numbers, they'll more than likely fund the deal, even if your credit score may not be as high. They make funding decisions without considering your credit score. When you want cash quickly, a hard money lender might be your best bet. They use the property as collateral and care about the numbers. That's why they are willing to lend a quick and easy loan. Number 2. Find private money lenders. Consider what other funding sources you can use when looking for funds. Another option you can consider is to look for private money lenders. If you are looking for funding, you can borrow from a private financier. Money can come from a variety of sources, including acquaintances, friends, relatives, or business associates. Private money lenders understand that if you really need a loan, you won't care about your credit score, which means even if your credit score isn't great, private money lenders can still lend to you and are usually much more willing to lend with competitive terms. The quality of your deal is what these private money lenders will focus on when they're giving you money. Here's the thing. Because they use their own money, these lenders don't need to see your credit score, or sometimes they do. Just show them a good profit and they'll be more than happy to help you out. Number 3. Strike for a partnership. Investing in real estate without any money can seem like an impossible feat. People have a strong interest in real estate investing. Why not find a partnership with someone? They can provide you loans without having to do the other hard work and would pay for part or all of your deals with their credit. But keep in mind, a partnership with that plenty of experience and skills is mandatory for the mutual success of your venture. Whether you're just starting out with a way to buy property or need some extra revenue and know how to commercialize it, partnerships can reach your goals with no risk but high return. A partnership is one of many forms of legal entities that can be used for investing in real estate without draping all your funds on the line. With a peak of bad credit and high debt, many people are struggling to invest in real estate. However, there is no need for lavish funding when all you need is a deeper understanding and hands-on experience. The partnership is more favorable to those that lack money but want to invest with someone who is experienced in the industry. If you lack credit, form some kind of investment partnership with someone who has excellent credit and secures the funds by sharing in the risks, with them taking into consideration what you have to offer. That way, they handle all of the chances while you still make money and keep the properties. Work out a 50-50 partnership. When you get your investment back, split it up however you like. Investing in real estate as a business is still popular, and you don't need money or credit to get started. You can register your limited liability company and make sure you take steps to protect yourself before beginning a real estate investment. Make sure you choose a structure with documents and legal registries. This can help protect your personal assets in the event of partnership problems arise. Never start a business without first consulting with a pro. A lawyer will put your company in the best position by showing you how to navigate regulations. Number 4. Seller financing. Seller financing is a strategy to use for fully owned paid-off homes. If the person you're working with isn't in need of quick cash, this could be a good option. Unlike typical conclusions lending, where the bank owns the property and lends it from themselves, you will have no mortgage. With these agreements, the seller allows you to make monthly payments until you pay off your home or expire on the term of the loan. There are many benefits when you use this strategy, such as negotiable terms, flexibility to meet needs, low closing costs, and credit is not a matter. Seller financing deals can offer a win-win situation for everyone. As the seller determines the terms, they often won't ask to see your credit score or deep into your finances. The seller also gets a monthly income flow. You should look for a property owner who's willing to do this. Here are several options that you can consider. First, real estate industry gatherings. Get in touch with the people around your area and join real estate meetings and industry gatherings. These events offer opportunities to network with potential investors who may have properties that they're looking to sell. Second, absentee landlords. Unlike other real estate listings found in local newspapers, you can find absentee landowners in either realquest.com or listsource.com. You'll be able to identify landlords who are not living in their properties and contact them instead. Lastly, vacant homes. Take a look around your neighborhood and see how many vacant homes you can find. Then contact the owner to see if they're interested in this kind of deal. Number 5. Wholesaling. For new real estate investors, wholesaling is a great way to get started. It's a legal way you can use to make deals without ever having to pay. Although there is often no credit score requirement, it still helps to have a track record of another property startup. How does real estate wholesaling work? First, find a seller who wants to sell their home. Negotiate the terms of your purchase and formalize an agreement to buy the property. Second, you could find a seller looking for an alternative buyer to purchase their home if you buy it yourself. This is more common in real estate markets. This could be another party who wants to renovate the home or a landlord who would like to rent the place out. Third, whatever terms you've outlined in your purchase agreement, that buyer will accept it and close the deal. Buying a business is a little different, and people might take some documents you don't expect them to. To avoid any surprises, create a purchase agreement template, or if needed, speak with your attorney to answer any question that might arise. And lastly, they take ownership of the home and amortize the promise from your partner. They get to the sale cost according to what you both agreed upon at the start, and you get an assignment fee for assisting the deal. Investors in real estate can easily generate money by buying and selling houses in masses. The key is finding a good deal from wholesaling and how much those deals could yield. You can make big money in real estate by wholesaling. Sometimes if you get a good wholesale deal, your profit could be worth $5,000, $10,000, or even more. That kind of profit helps you rebuild your credit and generate lots of capital. Number 6. To buy or to lease. Much like buying a rental property, although for less money, purchasing a rent-to-own lease is the option for investors and property owners who want free time instead of quick cash. If you're looking for a way to invest in real estate without going through the hassle of trying to find a property, consider structuring a rent-to-own lease. A rent-to-own lease is helpful, especially if you're new to investments and learning how everything works. In this strategy, a landlord shows the place to you as a tenant, and you agree to pay one of their rent installments in exchange for commission at the end of the lease. The rest goes towards putting down payment on the new home. The landlord will appreciate renting their property to you so that they sell it for a more promising sum in the future. You can get equity and ownership of real estate without paying a stunning amount of money. Number 7. House hacking. Making the most of your commercial real estate investment. House hacking means finding ways to earn income from your home. Traditionally, agents would only consider multifamily properties for house hacking with the hope of making a return on the property, as tenants pay for rent and owners build equity. House hacks are a good way for investors to learn about property management. Investing in other people's rentals is an easy way to learn more about certain aspects of the multifamily property investment business while benefiting from the payoff of having your housing expenses paid by tenants. Not all house hacking is the same. There are different strategies that can be followed when it comes to using your own home as an investment property. House hacking is a scenario that arises when you try to find ways to reduce living expenses, but can also be considered the beginning of a career in real estate investment. With minimal cash outlay and the high cost of housing, this method of asset use allows you to concurrently put money into savings or purchase additional real estate investment property and builds equity at the same time. House hacking is a way you can use your home to generate money, like renting out an extra bedroom, a studio, or accessory dwelling unit. You can purchase a house even if you have no money or bad credit and use the income you receive from house hacking to pay off your mortgage. In some cases, you can live rent-free. Number 8. Real Estate Investment Trust. Real Estate Investment Trusts, or REITs, are considered investment property with less of a cash-out requirement and a more investor-friendly status. So they are perfect for those who want the freedom to do things successfully without being solely responsible for the room and board. If you are not the type of person who wants to deal with the land or property management for your project or have a lack of cash available, real estate investment trusts might be quite beneficial for you. Real estate investment trusts can contain a group of properties in one place, creating real estate opportunities for investors and minimizing operating risk. These are also investments that allow for co-ownership of properties or other assets. Real estate investment trusts are a way of achieving what a large, diversified portfolio can't. Investing in REITs also allows you to keep speculative risks low and incorporate assets into your investment portfolio with minimal initial expenses. Number 9. The BRRRR strategy. Buy, rehab, rent, refinance, and repeat. The BRRRR strategy is a great way to get into a real estate with no money and bad credit, because you always have the option to refinance once you have, in theory, good credit. So now it's easier than ever to get your foot in the door with an empty wallet and improved skills at investing. The BRRRR method promises to lead to passive income while cutting some of the time, cost, and work associated with investing. It is a simple method, but it comes with responsibility and careful considerations like budgeting, planning, and patience. Number 10. Government loans. The loans offered by FHA, USDA, or VA often have low credit score requirements, low down payments, and property that can then be used as an investment property. These loans may seem more appealing to you if you have less than excellent credit, but sometimes a low credit score is just one requirement when applying for a loan. These loans can be used to purchase single-family homes or multi-family properties in two ways, using a particular loan program for either one. However, you have to keep in mind you're going to need to use the property as your primary residence for a period of time that you will have to deal with living next door to your tenants. There is no such thing as a cheap real estate investment. Just because real estate is the most expensive asset to consider doesn't mean you'll be rich overnight. Money has to come from somewhere, and investments have to offer you a good return. Whether you lack money now or you have a bad credit history, if you want to invest in a great property that comes with a special interest or extra perks, or a property where demand is higher than supply, your best bet is finding other investors with similar goals and learning how you will benefit from them. Which of these 10 ways that you find most helpful to you? Let us know your thoughts in the comment section below. That's it for this video, Real Talker. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!